And so we're buying this mortgage for $30 million, $40 million. I can't remember the number. And first of all, just as the bidding's about to end and we're bidding, our mouse runs out of batteries. So now we're panicked, like...
All right, episode 29 of the Deal Ranch podcast. Russ Flicker, thanks for having me in the office here. Excited to get to meet you and chat through your story, which you have no shortage of good ones, and then talk about the company story as well. So AWH overall, let you give an intro on yourself in the business, but you guys are a great vertically integrated hospitality, investment, development, and management company. So a little bit of everything. And you've grown rather quickly too, but looking forward to hearing your story. Thanks for having me in the office. Can you give a little intro on yourself and the company?
Absolutely, and thanks for being here. Thanks for meeting with me. Mm-hmm. Look, we started this company about, time flies, about 14 years ago now in the Great Recession. And my partners and I both were at big institutional real estate firms. Mm-hmm. And I would say we started it really because at the time in 2009, 2010, our golden handcuffs with those firms weren't quite as golden. You always have it set up where some of your profits, some of your long-term compensation is tied to the success of all these portfolios that the company owns. And they layer on more and more over time. And so those handcuffs become, more and more valuable, and you stay. And when there is an opportunity like that where values plummet, people do start to think, hey, is now the right time for me to do something different? And my partners and I came together and started this company.
Yeah. Wow. Interested to hear the transition there. So going back in time, when we chatted on the phone, you kind of told me about your story getting started in your career. But what was your transition from school to the Trump organization? I know you started a business somewhere in the .com, but what is that kind of spiel, and what was your early career like?
Sure. Well, so I'll say in college, I thought I wanted to be an investment banker or a trader. And I got the opportunity for a semester to work at Merrill Lynch in London on the FX desk in my junior year of college. And I hated it. I mean, it was great people. I loved the folks, but it wasn't as much personal interaction as I expected. And you were really working in front of computers. And so at that time I said, what do I do? And I would joke that my family wasn't financially so sophisticated, and so we had known a banker was like a teller, other than what I knew. I knew about a fireman, I knew, and I'd heard of a lawyer, and so I decided to go right to law school, really as a way to continue schooling and figure out what I wanted to be. I had a great time. When I graduated law school in 1997, I went to work for a big law firm, and very quickly I realized that I really liked being the risk taker, not the risk manager. Mm-hmm. And so, again, I had a good time working with those folks. I worked at Wilkie, Farr & Gallagher, and I was a real estate lawyer, and the .com craze hit. So I took that opportunity. I left my law firm, and I started a business and raised some money in the .com craze.
What was the business?
So it was a bricks to clicks business, which was one of those phrases that we used back then, trying to bring, call it the digital shopping cart to the traditional mall. And in fact, a lot of things that we had thought of, we weren't smart enough to execute on, but they were ideas that ultimately came to fruition. For example, if you can go online now and buy something from, I was going to say Circuit City. That's hilarious. How old am I? Let's say from Best Buy. And then drive in their parking lot and pick it up. Right. That kind of technology we were working on. In fact, we had a pilot program with PricewaterhouseCoopers. We had raised some money, but we were too young. We didn't really even know what we didn't know. Yep. And so the company did not succeed. And one side note is I started this business. I was raising money. A friend of mine at the law firm said, you should meet my friend who works at KPMG to help you start this business. She's really smart. She's entrepreneurial. So I met this woman, Lisa. We started that business together. We raised money together. And as the best man at my wedding said, business boomed off the balance sheet. And so we fell in love and the business failed.
Wow. So that you're saying that's how you met your wife?
We're married 23 years.
Wow.
So that's how we met. So it was sort of a successful business.
That's right.
Not for investors.
In a different way.
Exactly.
So we finished that. Where does that land you after that business goes under? You have obviously a good relationship now, but where do you go after that?
So I'm literally deciding what I want to do next step in my career.
Yeah.
We return as much money to investors as we can. And I start interviewing at real estate firms because I was doing real estate law, and then the .com business was real estate related, and I was interviewing at Vornado and Related and a few other places when the managing partner at the law firm, and they represented us for free, by the way. They were great. They helped us raise our money. So the managing partner there said, "Hey, I can introduce you, Russ, to Donald Trump." They represented Trump hotels and casinos at the time. And so I'm interviewing, and I think, great, I'm going to go meet someone at the Trump organization as I'm interviewing. And lo and behold, my first meeting I'm brought into, and it's just Donald and I in his office.
That's insane.
Who starts the most, the craziest interview I've ever had.
Well, how did the interview go?
So it's fascinating because, he was larger than life back then. Very different. There was no politics,
right.
But he was a pretty well known character in real estate, at least in New York City real estate. And so I went into his office, and right away he was peppering me with questions about the law firm, about other things. And it was surreal. So we had this meeting. He calls the law firm that recommended me to join,
right,
and asked them a series of questions on speakerphone while I'm sitting there. So you like Russ? You think he's smart? And I'm right there, right? So it's very funny meeting, and it ends with him saying, "Okay, well, how much do you want to make?" Now, so I literally negotiated a salary with Donald.
Yeah.
I left, and my current wife at the time, girlfriend, said, "What happened?" I said, "Well, I think I took a job. Doing what? I'm not sure. I never got to find out what it was about, what I was doing. We met, we negotiated a salary, and I left. And I said, I wasn't ready for that. I didn't come prepared." And so it was wild. I wasn't even sure if anyone knew that he hired me. So wow. I'll just tell you, I know I'm rambling, but 2 days later, I called back nervously, got his assistant, and I said, "Hey, I don't know if you remember me. It's Russ. I was here a couple of days ago. Don't worry. Donald told us he hired you. We're expecting you, and you start on whatever next Tuesday." And I started working for him.
Wow. What exactly was the job that you wound up with when you walked in?
It's unclear if he hired me for anything in particular, honestly.
Okay.
But my first few weeks there, my first day, I met a guy who was commissioner of housing under Ed Koch, who had run development for Donald for a while. And I'm now, old friends with him. He's an investor. He's a great guy. But when I met him the first day, he said, "Well, why did Donald hire you? Why are you here?" Which is not a great way to start.
Of course not.
And so it took a little while for me to even, Donald would come by and say, "Make sure don't let them keep you out of the deals. You should get involved in the Chicago deal." And then he would walk away, and I'd say, "Well, great. I have to I'm trying to meet these guys that don't even know who I am or why I'm here."
What you're doing, yeah.
But little by little, I got to know them. I got to be friendly with them. It's a very small place. So the gentleman who ran development for Donald, this guy, Charlie Reese, great guy, who I worked for my first maybe 3.5 years there. Literally after 3.5 years, we physically switched offices. He went part-time, started reporting to me, and then he retired, and I took over, which is crazy, but it was this very small entrepreneurial place.
Mm-hmm. And you were there for 5 or 6 years in total?
About 5. Yeah.
Okay. So over the course of when you were there, were you working mainly just new development projects? Like, where were you? Hospitality? Like, what? Because they obviously did some condo developments and they did hotels too, and quite a bit of other things. So where did you start to learn, and what did you start to gravitate towards when you were there, project wise?
So it was a pretty small shop, at least back then, and so we did a little bit of everything. I certainly spent a lot of my time on new developments. In particular, when I got there, Trump World Tower was finishing up, but Trump. The large project, the large mixed-use project in Chicago, I spent a tremendous amount of time with.
Wow.
Now I got involved in the condo project, Trump International Hotel and Tower that was already built, the management of that, and towards the end of my time there, I got involved in some of the projects that were more licensing projects in Florida. But I spent the bulk of my time working on a series of new deals, including Trump. The Chicago project,
Fascinating. So, in this 2004 time frame, what triggered you, or what was the path to? I had learned enough here. What made me want to go to Blackstone? What was the transition there, or was there a stop in between, or was it right to Blackstone?
No, it was right to Blackstone. So, look, I while I was there, Don Jr. started and reported to me, and that was he was a young guy. But that was an interesting dynamic. And, my last name's not Trump, so what's the long term? Now, I had a great experience there. I worked on really interesting projects. I literally was flying, on Trump's plane with Donald and a few other folks, to London or to Vegas or to, and many times on my own. But so I was a young guy. So it was very interesting, wild, fraught, exciting experience.
Under 30 too.
Yes.
Yeah. It's insane.
Wild.
Yeah.
And so I had a great time. But as the years went by, and I was taking a senior position, but Don Jr. was getting more mature and getting older. Ivanka and Eric wanted to join the company. I would say the writing was sort of on the wall. Is this the right long-term place? And I just got fortunate. I got called by a headhunter that was hiring for Blackstone.
Yeah.
And I was sort of, I'd say, the dark horse candidate, the younger candidate. They were looking at very seasoned developers. And when I ultimately got hired, they said, they said something to the effect of, we think you can keep up with the pace. You're a young guy. You've been working on 20 different things for Donald. It's great because, we're going to be running at a whole bunch of things. And so that's why they decided to hire me.
Wow. And what was the... maybe not exact numbers, but size of Blackstone, obviously significantly different than today, 20 years ago. What was the role when you first started there?
So I was hired and joined right after they bought the Boca Resort portfolio, which was 5 hotels. It was a public company, mostly owned by Wayne Huizenga, and mostly it was just the Boca Resort. But there were a few other hotels in Fort Lauderdale and elsewhere. And which I think was Fund 4. Blackstone Fund 4.
Yeah.
These are much smaller. Like they're buying individual assets.
Exactly.
So it was a very different time. And at that time it was John Kukral ran the real estate group. John Gray worked for him. And so it was a while ago. In fact, I like to joke that when I moved my family to Florida, I had a young daughter. And I moved to Florida because theoretically I'd be doing less traveling. I think we owned at some point 40 resorts in Florida.
Wow.
Turned out I was traveling all the time. But I moved my family to Florida and I'd come in for quarterly board meetings in New York. Sometimes other than that, but at least once a quarter.
Right.
And at those board meetings, maybe there'd be 20 or 30 people around a boardroom table and I was at the table. By the time I left, the boardroom table maybe fit 60 people, and I was sitting not at the table.
Second row.
Exactly. And because Blackstone had gotten so large and they were so successful, and buying individual assets became less their business. And so I was just adding less value. They were great. I had a great experience. I learned a ton, but it was, that's ultimately where I left.
So in that time frame, so 2009, part and due to what you just said, but also partly due to the recession, and you said your bonus is obviously tied to portfolio size, which is declining due to obviously a plethora of different reasons. So what was the decision making then? Hey, I'm leaving Blackstone to start something right away, or was there a transition step right after that? What was your thinking? What was the process?
So I wasn't leaving Blackstone to start a company. At that point, I left. I was looking at other opportunities where I thought my specific expertise on individual assets had the most value. So I left and I joined Ian Schrager to be his chief investment officer. Again, a recruiter hired me for Ian. And I'll say that I left Blackstone, negotiated a very friendly exit, gave them plenty of time, helped them put one of the guys that worked for me in, kind of taking over the projects that still needed taking over. Yep. So it was a very friendly exit. And I joined Ian at the time. I think Ian had said, look, you're going to take over the business. This is like you're going to be the president, or, this is where it's going. And I would say I moved my family back to New York. And at that point I had my second child when I was in Florida. So I had 2 kids. And very quickly it was obvious it wasn't a good partnership. Ian and I just were, didn't have a great rapport. And so when I decided to leave Ian, that's when I really was looking around saying, wow, the market is terrible. Things have really fallen apart. And so, getting another job wasn't as obvious.
Mm-hmm. Obvious, there were certainly not as many opportunities, right? So how did that end up with you saying, hey, I want to start to find my first deal? Did you already find your partner? Like, what's the transition after Ian Schrager Company? I heard it maybe on another podcast, but I'd like to hear it from you.
Sure.
So how did you end up starting? Because it had a different name. It was just the two of you, right?
So first I'll say, while I was at Ian, even though it wasn't a long time, I had a contract there for multi-years of compensation. So it was a big deal to walk away from that.
Got it.
And so I was talking to my wife about that, who's a great partner, and it was always very, very supportive. And I ran into, on the train, I was a Westchester guy, and I ran into a guy who I'd worked with at Blackstone, John Rosenfeld, on the train, commuting to and from. And I'm sure I complained about my job to him, and we were, just sort of commiserating. He had left Blackstone before me to join a hedge fund. Okay. And so we were talking, and this is, perhaps late 2009. And I must have said something like, look, I don't know. I might be leaving here. I don't know if this is going to last. I'm trying to decide what to do. So we started talking about doing something together. And when I ultimately left Schrager, John and I started looking for deals.
Cool.
And it really was, it's interesting. At that time, it wasn't so much, hey, let's start a company.
Right.
It's a really tough time in the market. Let's stay relevant. Let's find a distressed asset. Let's see if we can buy it. Let's put something together. So it really was more necessity being the mother of invention.
Mm-hmm. And what were you looking for there? Just stress value add? Like what? Any certain brand of hotel or anything? Any market were you focused on? Like you just wanted to buy a singular deal to stay relevant in case an opportunity to go back to another company kind of came about? Like in your, hey, look, we bought this deal, did this return, blah, blah, blah. Like,
yes. Okay. Yes. I think it's as much about in the early months, staying busy, staying relevant as you're talking to folks about there, certainly potentially looking for other opportunities to join a company. But everyone was holding on to their seats as strongly as they could because no one was hiring at that point. And we both had done other types of real estate in our careers, but hotels at that point were the most distressed. They had 35% reduction in RevPARs, which today we think is funny because they had so much worse in COVID. Yeah. But at the time, that was like the biggest deal, biggest drop they had. And it was a lot of financial distress. The hotels would bounce back, but banks were pulling back. The capital markets were distressed. So the element of where we really focused was, where do we have an angle? Now it's we're not a company. We're 2 guys that are smart and maybe have some expertise. Yep. But if you could go to friends and find something off market that you could put together, that would be the most interesting. Bidding with in a brokerage process with Russ and John at that point, smart people who used to work for big companies, kind of tough.
Yeah. What was your thought on where you were going to get that first capital for that first deal from partnerships you obviously had before?
Well, it's fascinating. I mean, I don't even think we thought that far ahead.
Yeah,
I think the first step was let's find. It is looking back. I can tell a grandiose story that we had this vision. The reality is, let's find something interesting to work on.
Yeah.
We called all of our contacts. Fortunately, we had great relationships with Blackstone, amongst others, and when we were talking to our buddies at Blackstone, I had only worked there 6 months earlier, so I certainly could be in close contact with them. We identified a hotel that I had been part of the team that helped take Meristar, a public company, private when I was at Blackstone. And one of the assets from Meristar was this hotel in Orlando. It was called the Sheraton Safari Hotel. It was safari themed. It needed a massive renovation. It was really kind of, don't hold me to this, but it had been 10, 20 years since it had been renovated. So it was an old safari theme. And my joke since had been that, because of the scale of Blackstone, that John Gray didn't even know he owned that hotel.
That's right.
That's only a joke. But my point is, it was a small cog in a total machine that they were doing. Right. And so, and I knew that they wanted to sell that hotel. So we decided we got permission from Blackstone. I'm sure we signed confies, whatever. And we decided, let's put together a business plan on what it would look like to buy this hotel. And that's what we did. So we spent time working on it, flew down there, met with contractors. What would it cost to renovate this hotel? What's our vision for it if it's no longer going to be the Sheraton Safari?
Sure. And
put together a business plan.
What did it end up rebranding to?
It stayed as Sheraton,
okay.
But it became the Sheraton Lake Buena Vista Resort.
Interesting. So no more jungle theme.
No more jungle theme. Look, we ended up spending more money renovating it than it cost to buy it. So we put more money into it,
but still a good deal.
Still a good deal.
Okay.
And we bought it. We bought it with a company called Area that was since bought by Ares.
Cool.
So now it's part of Ares. But Area, which was part of Apollo, and then Apollo's real estate group, AREA, Apollo Real Estate Advisors, broke off before we did our deal.
Got it.
And became Area and Apollo. And then Area, I want to say 4 years ago or 5 years ago, was bought by Ares.
Wow. So the first deal goes well. You have this, I guess not a hypothesis, but you're like, hey, let's do this first deal. What happens after that? So you have one deal, it goes well. I'm sure that was a longer time frame than that condensed story to get that first deal. But after that first deal, what happens next in this kind of, we're building up to more modern day of AWH?
Sure. So keep in mind, you buy the hotel and you don't know if it goes well for years. But it's
exactly right. So how did that stabilize over the next?
Yeah, so when we bought the hotel, we still weren't really making enough money on the one hotel to even, to sustain ourselves. Mm-hmm. But we had something interesting to talk about. Mm-hmm. And now we had a deal and we were starting to look at other hotels, to buy a second hotel, to buy more. And that's where we were introduced to our other partner, Chad Cooley. He was at the Related Companies. He and another partner, Bernie, had bought a hotel in New Orleans, kind of like John and I did.
Okay.
The two of them put together a deal of their own. Yeah. And ultimately, we started looking at some deals with them. We were still looking at some deals separately. But then Chad brought us this deal, which is now Spire Hospitality, our management company. He brought a deal because he had a contact that was owned by a family. And ultimately, it was a deal to buy a bunch of hotels they owned and a management company.
Wow.
And it was really interesting. So we ended up spending a lot of time on that, working closely together, and ended up buying the management company. And then ultimately, through some options we had, buying some of the hotels they owned also.
Neat. So that was Lane Hospitality.
Correct.
Okay. So this is like 2012-ish time.
We closed on the hotel management company in 2012.
Got
Yes.
it. So what made that the attractive buy? You buy one hotel, it's stabilizing. You're like, hey, I think we should do another deal. But then transitioning to a management company is obviously significantly different. So was that, what was the thought process there? Strategic play to be vertically integrated if we continue to buy other assets, or was it to, as a lead-in, to buy the other hotels that Lane owned? Like, what was the process?
I'd say there were at least three interesting elements to that purchase. Number one is it made economic sense on its own. And we actually bought that with the Baupost Group.
Wow.
We've since bought them out of the business, but they bought that with us. And it made economic sense on its own because the management companies with the right amount of scale are profitable. Mm-hmm. It also had these very interesting elements of these other hotels that were managed by the management company, where we were able to ultimately, we secured as part of the deal of buying the management company some options for those hotels. And then we were able to execute and buy 5 of the hotels they owned also.
Wow.
So going from 2 hotels to 5 more. And then I think the most interesting part is neither of those, and you touched on it. Both Related and Blackstone actually have this model. And of course, we're tiny, tiny specks. I don't pretend to be like them. But we had learned that having a hotel management company is such a huge advantage in sourcing, underwriting, and executing on hotels you want to buy. And so that is, you have employees, not just the corporate employees, but the general managers of all these hotels, the senior staff. They're all in the hotel business. They're smart. They've got connections. And so if you're looking at other hotels, they say, oh, I actually used to work at that hotel. Or I know the guy who runs that hotel. So if you're looking at other hotels, they can tell you a lot about them. If you're going to underwrite them, hey, how much will this hotel do if I fix it up? Having a management company that works hand in glove with you to help you come up with those operating pro formas is super valuable. And then even on executing when you buy a hotel, sort of what we don't have is we don't have anyone blaming each other. In another model, you'd say, I'm the buyer. It's probably the manager's fault. That's probably why we're not achieving our goal. Yeah. We're one and the same. And that is a little bit of what, again, on a very small level, Blackstone had done for a period of time, Related did. And so we decided it would really help us.
Wow. Yeah, that certainly worked out really well for you in the long run, but that's brilliant. That's interesting. So elaborating on the sourcing part, is that frequent? That was one of the questions I was going to ask you later, but the hospitality space, especially, let's say you have a hotel in Kansas City, and you're saying maybe you guys are looking to acquire another deal in Kansas City. You're saying potentially someone has worked at that other hotel in the past?
So yes, but it's much more than that. So I think we've got, when you buy a hotel management company, you've got the corporate office that has 60, 70, 80 people, whatever it is, including regional employees, right? So regional operators, HR, and it's a very small business. So they used to work for a different management company. And the operators work for different companies. The general managers move around periodically. Yep. So if you think about not only the corporate employees, but also the staff employees. Wow. And yes, it can be in the same market if you're lucky. Sure. But even if it's not, let's say I'm looking at a place nearby. Can you drive there and check it out for me? Yeah. Have you been there before? The regional person knows, or they know 1 degree of separation. Oh, my buddy, works for that management company, and so the ability to tap into a little bit of information, it could be, by the way, it may not be the hotel you're looking at buying, but it's one of their competitors. Wow. That's still pretty good.
Absolutely.
So that advantage, and those advantages really, they are symbiotic. So the more you grow, the more you have 1 point of separation between you and so many other pieces.
Fascinating. So bringing us to more modern day, when did you feel that the business was growing? So we start, you could go through this grind, and I'm sure that grind lasted for quite a long time. Buy the management company, I'm sure start to buy other deals. At what point did you kind of feel like, oh, wow, like we're moving at a pretty good clip here. Like we're buying new deals, we're stabilizing them. Obviously you have this trio of partners, which is unique and certainly worked out well for you guys. But how do things progress over time to now? It's $2+ billion under management and 35+ hotels. You can correct those numbers, but
sure.
What's the trajectory over time here? Because the economy starts to recover pre-COVID, obviously. What's our path from those days?
Look, we were still deal guys and gals for the first several years.
Got it.
And while we had, we'd have, some staff, and in fact, some of our closest and our best friends and colleagues that have worked with us for so long were here in those early days. Yeah. But in those early days, I like to joke, someone would say, someone asked if we have an employee handbook, and we'd say, great idea. Can you make an employee handbook? We need one of those. Yeah. So it was definitely very entrepreneurial. Somewhere in 2015, 2016, we certainly were becoming I say teasingly, becoming a real company.
Sure, of course.
Where we're putting processes and procedures in place, and we had some nice traction. And our growth trajectory, prior to the pandemic was fabulous. Now, we knew in 17, 18, 19, we were late cycle. No one was expecting the pandemic for sure. But many institutional investors were saying, hey, we're kind of late cycle. In fact, we were fortunate. We closed some deals with long-term, with 10-year fixed rate debt in 18 and 19 because we said we're going to have to go through a little bit of a correction. Not the pandemic, but hey, we've had a long bull market here in hotels. It's going to soften. But certainly when the pandemic hit, everything got pretty weird and pretty challenged for a period of time. It was very acute, but happily recovered thereafter. Yeah.
What did your investment criteria kind of, obviously when you're doing one deal at a time and you're focused, you're looking for that one deal. I'm sure you have targets in mind of what you're looking for, but as the business starts to formalize in a way or become more streamlined, what did you look for in deals? Obviously you guys are a value add investment firm. What stands out to you as a good buy? Is it like low occupancy? Is it low ADR? Like what are your targets? Or is it a blend? Is it a misbrand of like, hey, this shouldn't be a DoubleTree, it should be this? Like where are you, what are your criteria or what did they become in buying deals or looking for deals over time?
So you're right that the headline is we want to add value either operationally or physically.
Right.
Or hopefully both. Mm-hmm. And physical value add could be a brand change, and we've done a bunch of those, but it doesn't have to be. Mm-hmm. If you're doing if something is run down and you can fix it up, that's great. In fact, what you don't really want to see, and we tend not to buy, is a really well-run hotel that looks great and was just renovated. Because what can we do? Unless you can buy it for some odd reason inexpensively, but why would you be able to? Mm-hmm. What can we do better? If we can't do anything better, it might be a commodity, in which case it's well run. We can't add value. Now, at the same time, you need to think about a variety of overlays on top of what I just said, which is you can fix a hotel up, but the market just doesn't have enough money to give you. There isn't a demand for that higher end or that better hotel. So even though it's run down, why are you capturing more ADR? Is there enough? At a very generic level, is there enough occupancy? But is there in the market
enough demand?
Enough demand. Yeah. Are there other hotels that you can steal share from that are getting that higher rate or not? Yeah. And there's a variety of pieces like that. And then I'll just say the one biggest thing that I haven't mentioned, which historically, outside of COVID, has been the single biggest challenge in the hotel market, is supply. And so, everything else has to work, but then you have to figure out, are there more hotels currently being built or currently being planned that are near you, have a similar customer, God forbid a similar brand family? If you have a Courtyard and there's going to be a couple of Residence Inns nearby, you have to be pretty nervous. So supply is a very big factor you have to evaluate. But before supply, it's all demand driven, and can you get a better share of that market?
So kind of along with that, how are you able to, you guys right now, what is the current property count or in AUM right now, roughly?
Yes, so we have about 32 hotels today, and we are selling a few, so that'll continue. But it's a good sized portfolio, and we're coast to coast, but it's opportunistic. Yes, it's scattered.
So being scattered, when you look at your guys' map on the website, obviously a lot of good big markets that you're in. How are you able to? There's three of you, right, that founded the company, but how are you able to be plugged into each of the markets and still be like this mid-sized company? Like how are you underwriting all these new markets, and do you heavily lean on the management company for information and evaluating these new markets? Because obviously hotel being a hyper local business, right?
Yes.
How do you guys do that?
Well, there's a few answers to that.
Okay.
Number one, certainly the management company is a huge part of that.
Yep.
They've got a lot of expertise and great, smart people that help us evaluate hotels and markets and submarkets for sure. Yeah. We also have a fabulous team here. Very smart. We've hired. I'd say the key is hiring people that are smarter than you, and I think we did that. Yeah. Maybe the bar was low, but we did that. And we have a really smart team here, and we've got a great acquisitions team. Dedicated, and a separate dedicated, a team that handles accounting and office, and a separate team that handles asset management.
Yeah.
And so they're really smart folks that really spend a lot of time digging in. All that being said, in addition to the human capital, which is huge, in addition to that, we have invested heavily in technology over time. And it started before the pandemic, and it really sped up after that. And when I say technology, there's a few different components of that. But there's all this data out there, particularly for hotels. Hotels, in general, we report to companies like Smith Travel Research, which is now part of CoStar. We report our daily occupancy and ADR and all this kind of facts, which you can get in a competitive set or in a submarket. But everyone has access to all of this public data that they're slicing and dicing. But if you layer in that public data and know when to use it, how to use it, and add to the fact that we've got our portfolio, so we've got some private data, we've got things that we bid on previously, and we said, okay, what were they worth, and where were we right and wrong, and we put that all together. What we're able to do is not only draw down and say, how do you compare different Hiltons or Doubletrees or Marriotts or Westons in terms of RevPAR growth, GOP, all those kinds of interesting financial statistics. But also, when we're looking at modeling a hotel we might buy, we can have the data actually start to formulate and give guardrails to the human capital. Hey, the growth rate should be between X and Y here, based on historical, based on Moody's forward-looking data, based on CAGRs we've had, which is growth rates over time in markets or submarkets. And even though we're all really smart, I'll speak about myself. When I'm in an investment committee meeting or an underwriting meeting, I might not even realize that I'm bringing my own subjectivity, because I kind of think Dallas is great. And so if I love Dallas and I think Dallas is great, if I'm not careful, I'm going to always be underwriting Dallas at an extra half a point of growth. So if we can objectify all of that and use those guardrails intelligently, what we do is we end up not liking some hotels as much as we maybe thought we would, and we might like others because of their market, their brand, their location, et cetera, et cetera.
So in a way, this heavier push towards technology almost gives you these guardrails that, without obviously emotional attachment, can provide you parameters to kind of qualify or disqualify, probably in a quicker manner too, or give you a better litmus test. Hey, this is a good deal because of this. And if it falls out of those ranges, it's like,
you said it totally right. One of the biggest values is quickly discounting deals and what to focus on. Because look, there's so much for sale out there, and being hotel only, we have this niche. But we have there's so many brokers, so many hotels. We have all this data, and we're constantly having broker calls, seeing OMs, getting folks suggesting to buy this one, buy that one, and being able to focus on where we should spend time based on these objective metrics, and then layering in the really smart people we have here, evaluating it, our hotel management company, and by the way, our development team, which is how much would it cost to turn this Marriott into that Westin, or to renovate this, or to go from tubs to showers, or redo this lobby, whatever it is. You put those pieces together, and you become, pretty formidable.
Wow. One thing that's stood out, maybe in an article that you were quoted in, so it seemed like you guys may have a priority on the Condotel market, and I think that would have been maybe the acquisition, the Grove Resort,
sure,
is part of that,
yes.
Or is Condotel. What's attracting you guys to that? And we can kind of bring everything more modern day. Like, what are the priorities right now? But I guess for a minute, what specifically about the Condotel market fascinates you guys? And I think Chad even mentioned that too. So it seems like it is a priority for the team. Why are you fascinated? What's the opportunity for the company?
So condo hotels, which are really a different animal, they're in some cases have very little real estate, and essentially you're buying a management business where you're managing someone else's units. And what we think is interesting is in some cases, not all cases, where you have longer term contracts to manage. We think you can really add value, and we can come in, we can do an institutional job of managing, so we can do hopefully a better job for all the owners and create more revenues to start with.
Yeah.
But also there's a mispricing of that management business because there's so much out there that are totally different. There are some units where, let's say you have a hotel of 100 condo hotel units. If only 50 are being managed by you and the other 50 are being managed by 50 different people, and your management agreements are up on an annual basis, you might lose them. It's very tough to run a good hotel because some of the units are lower quality, the brand is being diminished. Some are on, I have nothing against Airbnb, but if everyone has different units and they're renting them themselves, it's hard to price them. You can't bring in groups. You can't price far out because you might lose the units. On the other hand, if that same hotel had all 100 units rented by me and I had a 5-year agreement to rent them, I'm going to do better for every unit owner because I can bring in groups. I can optimize my revenue management. I can make sure the quality of the units is high. And so what we have in Grove is units that are all designed the same, that the vast majority have agreed to be in this rental pool. And so you can actually optimize and run it as a hotel much better and for the benefit of everyone. And so we think that's pretty interesting if you can find those opportunities.
Absolutely. What percentage? There's 878 units there. It's quite a bit of units.
Yeah, we manage something in the neighborhood of 98% of those.
So let's say a condotel with the 50-50 split. How are you converting? Because it's a lot of people that maybe not likely self-manage, but they're hiring a smaller management company or a hyper local. They own 100. They manage just 100 individual units, and I go to them on one of. How are you converting or gaining that market share in the building?
Well, I'll tell you, that's why those are tough to buy.
Yeah.
So the value proposition of that, the two condo hotel, let's say one you manage 50 and all others, and the other you manage 100. The one where you manage 100 is worth much more than 2 times, even though it only has twice as many units under management.
Right.
If that makes sense, because
the stability of long-term product,
the long-term product, and the fact that other people, if you're going to buy a unit through me, rent a unit through me, but then you go on Airbnb and you say, well, sometimes there's units that are half the price, or they're not as renovated, or I hear a bad review, but that's because that unit is not being kept up.
Right.
All those things run into it. So that's why it's so interesting. And I would say my point is that other piece might be worth 10% of what the other one's worth.
Wow.
And so I don't think there's necessarily a sophistication across all of these, and finding those where you can really add the most value by bringing institutional management and raise this up, because we have enough control over the quality and the revenue management and the groups and the long term adds a lot. And so we're looking for, it's a needle in a haystack, but we're looking to buy those.
Is there a component of the building that has the 50-50 split where there's almost as if you're underwriting an apartment deal and you're looking at it, and let's say it's a 4 cap and low cap rate, but the rents are 30% below market. It's almost like there's significant upside because you could over time collect the other 50% of the units. Is that of interest to you guys in any way, or is it a long road to get all of those management contracts?
The answer is probably it depends.
Okay.
Like I think if you're there, we have looked at, can you buy some of those, let's say, cheap enough that the upside is valuable?
To convert
the upside of converting other units. Look, it's not easy, and sometimes those unit owners don't want it. They
hold
want
out too.
They've got their own plan, and that's fine. God bless. We need to convince them where this is true, and often it's true, not always. Yeah. But look, everyone being together with the same plan is more value for everybody.
Yeah.
And the free rider trying to get, and it's okay if there's one free rider of 100, but the free rider trying to get the advantage of this without paying the same management fees to save X% of management fees is, if you're doing that, if a whole group is doing that, you're all making less money because no one, even in the guest, doesn't know what the product is. It's all different. Sometimes they show up and they're unhappy. You go to TripAdvisor, they can be furious, but that's not my rooms. You know, and everything from quality of the hotel, of the unit, but also could be like services or check-in, things that you don't control. Mm-hmm. So how are you supposed to improve this when you're competing against yourself but you don't control it?
Wow.
If that makes sense.
No, it 100% does. Yeah, that's fascinating. So what markets in particular, like where I'm from, the Myrtle Beach market is a big Condotel market.
Sure.
What other markets are big for that focus? Florida, obviously.
Florida for sure, as a big condo hotel market. A lot of the mountain towns, like a lot of the ski towns, have condo hotels. So certainly in Colorado, there's a lot of condo hotel, and I think that also some of the legal structures for condo hotels have evolved over time, and I would say that some of the more recent legal structures help you with full disclosure, and I think owners understanding and buying into the concept I described, which is we all do better if we stick together. Yeah. Some of them have codified that better. Older condo hotels that may not have done that sometimes have more of the 10, 20, 50% are managed elsewhere. And it's very tough to corral that into a structure that where you get back to, listen, let's all stick together. But it's possible.
Interesting. One thing that stood out, and I think we talked about it when we first spoke on the phone, but it seems like some of your deals, obviously, you have JV partners in there, and you mentioned a couple interesting capital partners. Where, as you start to grow and you're taking down these much larger deals over time, what do you value in capital partners? Who do you JV deals with? And was finding capital, debt, or equity a challenge in any way for these larger deals as you've grown?
Look, let me say we've been wildly successful and lucky to have such great partners. Yeah. Cross Harbor, Apollo, Roxborough, Star, Storage Company, Bill Ackman's family office, and of course, Battle Post and Blackstone and Oak Tree, and all these great partners. We've been very fortunate. I think counterintuitively, ironically, once you have a little bit of a reputation for successfully purchasing things, larger deals are easier. Everybody, meaning there might be a lot of competition, but raising the money on a deal that you either control or even bidding on a hotel deal that is out there that a broker is selling that has a large equity check, if it's an interesting deal, there's a lot of folks who want to play in that area. And so our business really is, I'd say, broken down into kind of two areas. That large institutional deal with a large equity check. And we've been fortunate to have great partners. And even beyond the partners I mentioned, there's another half a dozen groups that we've looked at deals with that we will buy with, I'm sure, in the next couple of years, that we're bidding on with things right now. And so we're very fortunate from that front. And the challenge is only the competition.
Got it.
They're very rarely off market, right? If it's a $100 million equity check, who is selling it off market? That would, so ultimately, it's a competitive process. Yeah. Can you pay $1 more? Are you confident? And we get our share of those. And then the other side, and we'll continue to do that. And the other side of the coin is the sort of smaller equity checks, where under $20 million of equity, really under 30 in many cases, so many of the groups I mentioned are not interested. That's too small.
Yeah.
And so what's fascinating is, and at its extreme, let's say a $5 or $10 million equity check of a $30 million deal, let's say a $10 million equity check, we might be the 800-pound gorilla, right? Our small little company, we might be the biggest person bidding on it. We might be the most sophisticated. And so sometimes you can do well in those situations. It might be a little bit less competition. Yeah. And so we've had success in both areas.
So is it valuable for you guys, you being the 800-pound gorilla on those small to, we'll call them mid-market deals? I assume they must be pretty profitable because some people are staying away from them, but is it challenging for you guys to still pursue those because your typical capital partners aren't interested in doing that deal? Is it cumbersome in a way at all?
It is. And I think the way I think about it is, or we think about it is, the downside is there's just as much work on a small deal as a big deal. And so the scale is just better. So whether it be the the upside, the profit potential, the promote potential of the bigger deal is much bigger. At the same time, we're fortunate that we don't have a large fund and don't feel like we have to put out money. We don't have a gun to our head. It's a different structure.
Right.
And so what that means is it's all about opportunity cost and what we see in the market. And so if the smaller deals are interesting and that's what's available, and maybe we can get it off market or with less competition, and that often leads to a higher cap rate, a better profile, we should do that. And one other thing I'll mention, and this is a challenge of smaller deals, at least some, liquidity is different. And for the same reason that fewer people are looking to buy it when we buy it, let's not kid ourselves. When we go to sell it,
same
people
group.
may.
Yeah.
So you have to be thoughtful about liquidity.
That's fascinating. Interesting. Before we kind of transition to deal stories, I know I'm hammering you with questions here.
That's great.
You've got no shortage of great stories to get to. But as far as hotel brands, there's some soft branded assets you guys have. Didn't seem like a ton of independent or boutique. I could be mismarked on some,
not
right?
a ton, yeah.
Yeah, but then in just the branded space, unsophisticated point of view, looking through them, good bit of Marriott, and then it seemed like Hilton DoubleTree seemed like a popular for you guys. Are there specific brands that you guys are attracted to for certain reasons? How do you kind of elaborate on that? Like, how do you evaluate, and what do you, I guess the better question is, what do you value in acquiring certain brands?
So we certainly have the most experience with Marriott and Hilton brand families. And so, in Hilton, it could be Embassies or DoubleTrees. There are Hiltons and Westons and Tapestries. In Marriott, it could be, Resi-Inns or full-serve Marriotts or, you name it, right?
Yep.
And so we have the most experience in those two. And I would say that those are very strong brand families. And the reason we like those brand families, because they are very strong, it means that the liquidity in those, being able to exit in those brand families is very high. People highly value it. Being able to finance those is very high. And also being able to drive incremental RevPAR, incremental rate when you fix that hotel up and get a bigger share, I think is high. And also there's an element of it's what we know, and so we're really good at that. Look, we've had IHG hotels, we've looked at Hyatt hotels, and we understand those as well, and I think you can be successful in those. We have a few lifestyle hotels, a few boutiques. Grove is an independent. We have Top Notch Resort in Stowe as an independent. We have High Peaks in Lake Placid as an independent, and really, independent depends on what the market needs or wants. It depends on are you getting enough for the franchise fees you'll pay and everything else. And often the answer is yes, but not always. And so we try to be agnostic to that on what's the better deal. Funny enough, the Lake Placid Hotel, High Peaks, used to be a Hilton back 20 years ago.
Oh, wow.
Before we bought it, it was converted. It went from Hilton to independent because they said, in that market, and we agree today, because Hilton would love to brand it. We agree today it's just not worth the incremental cost, for example.
And then at some point, it seems like some hotel investment companies almost have this strategy of buying independent and kind of building the hotel into what they want it to be, and then kind of crossing over to a soft branded asset to get all the kind of economies of scale in a way too. Okay, so transitioning to deal stories and looking back through your career, it seems like there are no shortage, but are there any, we chatted about the Grove a little bit, any just in your mind that you think is a good story? Could be challenging, could be the hardest deal, most complex deal, most rewarding. I know that how you met Bill Ackman seemed like a funny story too, but kind of what stands out to you in your career as fonder moments or tougher moments, putting deals together?
Well, I'll tell you two stories. One, first, a very quick Bill Ackman story, and then a deal story. So, Bill Ackman, who's been a great partner of ours and a great guy, and I met him through his father, and who passed, and who's a great man. And when I was at Blackstone, I worked with his father on financing a condo building we were building. And I got to be friendly with his father. And when I left and ultimately went on my own, we kept in touch. He was a great guy. And And I would say that he suggested, when I was first starting this business, he suggested that I meet his son. And foolishly, just not knowing that Bill Ackman was his son. So I know that it's like everyone's going to laugh at me now, but I didn't know that he was Bill Ackman's dad. Foolishly, I thought, like, does he want me to like hire his son? Like, I don't. So I said something to the effect of, "Listen, Larry, that's great. I'd love to meet your son, but I'm just getting started. You know, it's just me and my partner." And he said, and I can't remember the number, but something like, "No, Russ, my son's not looking for a job. My son made $500 million last year." And don't hold me to the number. And I said, "Oh my God, Larry, is your son Bill Ackman?" And of course, then I was so sheepish. I was like, "I would love to sit with your son, right?" So it was a very funny story, and he's been a great partner from the beginning and a great guy, great supporter. But shifting gears, here is the one I think a story that epitomizes what it's like when you start a business, and look back and it sounds. And I tell my kids who are in college and excited for where life takes them, and I said, look, it can sound sexy in hindsight, but when you're actually living through it, it's not sexy. It's dark. You don't know that you're going to be successful. And when you're there, you and no one else knows that you're going to be successful. So back when they had bought the hotel in New Orleans, we had bought the hotel in Orlando, and we had closed on the management company. And that took us years. We were trying to execute on the first option that the management company had
to buy one of Lane's.
Correct, but it was a single mortgage against 3 hotels, and we were the manager. But so we had this information, but the servicer essentially was underwater. Right, it was worth less than the debt. And
the 3 hotels. There was one mortgage. One mortgage
on these 3 hotels, wow. And so we tried to buy the mortgage, and we had a very inexpensive option to take over the equity essentially. So we negotiated with the lender as a contract vendee. Look, we're stepping in the place of the borrower, and we'd like to buy this at a discount. This is what we think it's worth.
Sure.
And they said no, we couldn't come to a deal. So then they decided to list that mortgage on auction.com.
Okay.
And auction.com, which is now has kind of matured and changed hands a few times. But at the time, it was, this was, I think this was 2012 also. Maybe it was 13, but I think it was 2012. We had just bought the management company. So we're in a different office. We only have 2 hotels in a management company. And we're sitting around a table with a laptop, and it's like eBay. And literally, by the way, we had Baupost on the phone because we were talking to them. They were our partner in the management company and these options.
Wow.
And you're bidding there's like a buy. It's like, I'm joking, there's a buy now button, but it's like eBay.
Sure.
And you're clicking bids, incremental bids. And the way auction.com worked at the time is you didn't know. You could be bidding against someone else, but you could be bidding just against the lender. Like, you kind of don't know. And there's a lot of pressure. And so we're buying this mortgage for $30 million, $40 million. I can't remember the number. And first of all, just as the bidding's about to end and we're bidding, our mouse runs out of batteries. So now we're panicked, like, holy F, we have to click, you got, hit the laptop, we got to bid. So we win the bid. And the rule on auction.com is you have to put down 10% within 24 hours. Now, at that point, they were mostly selling single-family mortgages for small. So they didn't have an escrow agreement. So our lawyer, which is a partner at Arnold & Porter now, but he was like, well, you can't put down $4 million without an escrow agreement. So he calls auction.com's general counsel, gets a hold of him within the 24 hours and says, listen, my clients are buyers. We're ready to perform. But you want an escrow agreement, as much as I do. We can't give you $3.5 million. So the general counsel agrees. We negotiate their first escrow agreement, I guess, and then ultimately give them $3.5 million and or whatever it was, and buy the hotels.
That's insane.
So that was fun.
Wow, that's wild. And how'd that deal work out for you in the long run? You got it at a good basis,
yes,
I would suspect.
Yes, it turned out to be a great deal.
Fascinating.
Yeah, fabulous deal.
That's a great story. So last couple of questions for you, Russ.
Please.
So with the evolve. The business is continuing to evolve, and obviously this market being a little bit cumbersome and unique. What is the team focused on today? Where are you guys at in the market? You mentioned lightly selling a couple assets. are you freeing up capital to do another deal? Where's your focus? Is it on the management side? Is it acquiring? Is it kind of tightening up and selling up and getting more cash? What are you guys focused on today?
No, we're absolutely poised for growth. Look, I think our vision is we try to take a longer term view. We don't know exactly. We can't predict when deal flow increases and transaction volume increases. We can't guess if that's 3 months from now or 18 months from now. But we know at this point in the cycle, generally, at some point in the coming, 12, 24 months, there's going to be a lot of opportunity. And so we want to be ready. So we're as an organization, we're bigger than we've ever been. This is our largest. In fact, we took space next door, and this will all be renovated together soon. And so we're growing. And in the interim, while we haven't seen that transaction volume pick up, in addition to focusing on the technology, others of those deals that are coming out, we're bidding on a lot of them. And bidding sometimes means, look, this is not where the seller wants it to hit. But often in our history, we get called back 6 months later, 18 months later. Hey, AWH is a group that spent a lot of time on this. And I don't want to say this in a pejorative way, but if the seller becomes like, look, I really need to transact, or maybe the price I thought I could get, I think maybe I have to be a little bit more realistic now. We're going to be in those group of 3 people that really spent a lot of time and be ready to transact. So our posture is absolutely leaning in. Although, as we tell our acquisitions teams, they're not really, because we don't have a dedicated fund, we're not paid to buy. You're paid to go through the process. If nothing comes out of it, that's fine. We're going to kind of be disciplined, and we think we'll have, we're pretty bullish on our growth, in the coming years.
That's fascinating. So you take a detailed approach to hammering out bids, obviously as you should, but like almost the long-term value of the seller respecting you as a buyer who did a lot of due diligence and put together, a good offer, albeit it didn't work out. Is this long-term kind of goodwill in a way to win those deals later potentially?
There's two elements, totally two elements to it. One is exactly your point. They'll call us back when the broker says who spent the most time on it if we have to really transact. And the other piece is, I think, what it gives sellers and brokers by and large, it's a small community. We all know each other. We've all worked together before, even if we've been on opposite sides of the table. I would like to think we have the respect of our competitors and others in the industry and brokers, so that when we say, hey, I'll hit this number, I'm ready to transact, I can close quickly, they believe.
Yeah. Wow. Is there any market service, I mean, you guys do a lot, but any market service or asset class that you besides what we talked about today, that you think you guys would evolve into in a little bit? Now, I only preface that because the San Francisco deal you bought, Villa Florence Hotel, had some retail space, I think, that came along with it too. Yep. Maybe peeled it out and sold it. But is there any market that you guys haven't been in or aren't in, hospitality-wise, or any other service or asset class that you think you would do in the future that you haven't done today?
So as far as market goes, we there are a lot of markets we would play in that we haven't played in, and we've probably bid in so many, in so many different markets now that we've, even if we haven't had success, I'm sure a lot of that's true. As far as asset classes go, I'd say, look, we like hospitality because we think in general it's not commodity. We can do a little bit better than someone else. We can fix it up better. We have relationships with the brands. We know what's right for it. We can renovate it. Whether it's $1 cheaper or better said, we can spend the money more here versus there to grow that ADR. We have threatened to play in other businesses that are related to that. We have a lot of restaurants, for example. So that's a business. We have a lot of retail. We have, not just in Villa Florence, but in a lot of our places we have, we're landlords. And then also, I would say this is more academic, but we started our business in a analogous situation, actually not as bad though, as where office is today. And so I'm intrigued, but I just don't have the right business plan. But if I did, and if someone's listening to this and they have a business plan, you should lean into office, because that's a place folks will do something, will capture the opportunity where you can really buy certain office buildings very inexpensively today. I just don't have the right business plan, but someone does, and more than one person, and they'll do quite well in that industry. But I would say lean into where the real distress is. If you if you have conviction, and you can be very successful.
Yeah, that's well said. Last question. Who along the way, you've worked with some really fantastic real estate figures along the way. Who do you think along the way helped you the most? Maybe learned the most from in a mentor relationship, or maybe got to work under or work with? Who do you think was most significant maybe in your career along the way?
I'm going to answer this, and I don't know if this is the way you were thinking about it, but
There's
tell you.
There's no certain way.
Okay,
Yeah.
Good. Because my partners, it's like being married. I've got two partners, and I say it's like being married because we argue like cats and dogs from time to time, but we're stuck together in the best possible way. And I've learned a tremendous amount from both of them because we all bring different experiences and different skill sets to the table. And so, Chad Cooley, John Rosenfeld, they're both very smart, but also our decision making in that kind of three-person, three-partner, the I was going to say battle, but it's often not a battle. But
Sure.
the process that includes passionate disagreement from time to time, but also often brings up ideas or directions that very often I did not think of or I would not have thought of, and is additive. And I hope they feel the same way. Has been remarkably positive. And so I do think, and of course, and also, Chris Russell at our management company and Tim Osiki, who runs our development business, and all the folks here in New York, they're so smart that if you surround yourself, they're not going to be yes people. If you surround yourself with smart people, they will challenge you and you'll be better for it.
I love it. I think that's a good place to wrap. Obviously, Chris Arlotta put this together. Thanks to Chris for doing that.
Sure.
Is there anything AWH that we missed in wrapping up, Russ?
I just think we're poised to grow, and we hope we have the opportunity to partner and grow more in the industry. But we've been very lucky. Feel very fortunate.
I love it. Well, thanks for coming on the show, and thanks for hosting me.
Thank you so much for having me. Appreciate it.
Thanks, Russ.